Hello, we're going to get started. There'll be more people settling in. Thank you for coming again. My name is Sam Schwartz. I work here at the Center for Financial Wellness. And today we have part one of a two-part car buying series. And car buying is a really complicated process. So this will give you a viewpoint from the banking, lending perspective, and other pro tips. We have our team from Sound Credit Union here, and I'll let them introduce themselves and their roles at Sound. But thank you for coming and ask questions along the way. They're very helpful.
Can everyone hear us okay? All the way in the back? Great. First of all, thank you for coming in on this sunny day to learn about car buying. We're really excited to be here and have a discussion with you about buying your vehicle. Maybe it's your first one, maybe it's round two, but we're excited to share this information with you. My name is Vanessa Kavanaugh. I'm in our consumer lending department. I process loans as well as review them and educate our members on financial advice for, of course, purchasing vehicles and other things.
And my name is Janelle Borseth. I'm the Consumer Lending Manager at Sound. I've been with Sound for 25 years now. And I have a passion for lending and I have a passion for financial education and wellness. So thank you for having us here today. We are excited to kind of explore the idea of car shopping, auto buying, what that means for you and your future. So please, if you have any questions, please don't hesitate to ask. You do not have to wait to the end. We'll welcome anything you have because we want to make sure that you are here and getting what you came to get today. So thank you.
All right, so starting. Know before you go. So being prepared is key to success. So that's gathering all of your information, what you want, what you're looking for, options. Some of those things would be what you can afford, right? So most likely you're going to be financing your purchase. So looking at what that means to your monthly budget. Something to consider is now you're going to have a car payment. How long are you going to have that car payment for? If you're financing, you're also going to need to know you're going to pay insurance as well. Right now, you might just be getting away with liability insurance, but lenders want you to have full coverage. So those insurance rates may change. You're also going to want to consider the mileage, right? So you have to get from point A to point B. So are you going to do that by fuel? Are you looking at an electric option? So those are some of those other costs that you're going to incur outside of just your loan. And then we have our buy versus lease. Has anybody bought a vehicle before? How many of you have financed your vehicle? Awesome. Has anybody leased their vehicle before? All right. Is there anyone that can tell me what the difference is? Any ideas? All right. So the difference is financing, you're going to become owner of that vehicle, a registered owner. A lessee is going to be someone who is borrowing the vehicle. So a lease is a term that you're going to have that vehicle for, and you're going to drive it around and you're only going to have it for this amount of time. And then you have the option to return it to the dealer. That includes sales. And then you could possibly pay additional fees for going over that mileage, as well as wear and tear on the vehicle. So that means door dings. That means scratches. Maybe you hit that curb. Now we have some scratches on our rim. Those are things to think about. Usually they want cash down and you're going to pay taxes right up front. But what if you actually like that vehicle? This is a good vehicle. I'm glad I got it for 36 months. I want to go ahead and buy now. Something to consider is that residual balance is going to be something that you're going to pay taxes on again. So it might be okay for you if you're like, I just kind of want to see what I want and get the feel of it. But those are some things to consider with leases versus financing.
Buying a car can be super fun, right? You get to go out, you get to purchase your new car, you get to drive it and all that. But it's also one of the 10 top most stressful things we can do as a consumer. So we get that. So that's one of the reasons we're here today. We want to make sure that you're educated on a full aspect of what it is. And Vanessa just gave you some really good ideas of like what it is, what can you afford. But what about credit scores? Do we know about what our credit score is and how that factors into purchasing and financing a car? Let's see. What else do you have on that? Oh, oops, wrong way.
There we go.
So your credit score is a reflection of you and what you have done financially. We all start off with a 0 credit score. And as we navigate through our financial world, we obtain trade lines, credit cards, personal loans, and auto loans. Once we get one of those trade lines, we adopt a credit score. And that credit score sits in line with our financing guidelines, and it tells us what you're going to pay in interest. So the higher your credit score, the lower interest you're going to pay. And the higher your credit score, the more your approval basis is gonna go. What is your budget? How much can you afford? How long have you been at your job? Do you plan on being at that job or a similar type job over the next 60 months of that term? So you want to take in factor of that. Just because you have a job right now, it doesn't necessarily mean you're going to have a job in 12 months, but you still have that auto financing loan where you're going to have to pay for up to 60, 72 months. And how are you paying? So there's lots of ways to pay. One of the things I let people know when they're buying a car and financing it is to set it up on auto pay. That way you never miss a payment, and it comes out of your bank account, and it's just automatically good to go, and you don't have to be responsible for making that payment. If you miss a payment, it lowers your credit score, and it affects your buying power on your next vehicle.
Something to consider too is different payment like if you want to do like monthly versus biweekly. So sometimes when you're building your budget, if you get paid biweekly, it might be helpful for you to split that payment in half. If you do it that way, then you end up making probably a couple of extra partial payments, which helps bring your principal balance down. And then you pay less interest over the life of the loan. So those are things to consider, as well as down payments.
Mm-hmm. Before you go to a dealership, you definitely want to know what it is you can afford. Can you afford $300 a month? Can you afford $600 a month? Can you afford $200 a month? Those are key factors. When you know what you can afford, you want to stick to that at the dealership. Because we all want to drive that Lamborghini, right? But I can't afford it, so I'm not gonna go get that car. But I'm gonna stick to a car. So if you go to a dealership and you say my budget is about $300 a month, that dealership's gonna direct you to their vehicles that are going to be financed right around $300 a month to kind of keep you off of that area of outside of your budget.
So something to think of is to get a pre-approval. So at the beginning, you thought about how much you're willing to spend on a vehicle. You've probably done your research. What's the type of vehicle? What's the typical price range? So you can do that by looking on things like JD Power, KBB to see what the going price is. You can do your research by local dealerships. You can compare that by private party. Because when you go to the dealership, they're not just going to be pricing it as what you see on the valuation, which are like JD Power, KBB. They're going to be basing it on demand as well. So if that vehicle is pretty rare and you want it, they're going to price it at that too. Something else to consider is that price point that you're willing to go for. So if you go into the dealership and say, I only want to pay $230 a month or only $300, they can shape that loan to fit that payment. So that can put you well outside of how much you want to buy the vehicle for, right? So there's another thing that they look at is the term. So there's going to be a big difference between a 36-month term versus a 72-month term. Now that rate does go up the longer the term, but it also gets your payment smaller, right? Because we're paying over a longer period of time. But you also pay more interest that way too. Yep. So if you have your heart set on this vehicle, it has these features and you see and you're like, I really want this, but it's about $10,000 out of my budget. What does that $10,000 really mean? Look at you can do calculators, look at how much interest that difference is over the life of the loan, because there is a cost for that loan, right? And that's the interest that you pay.
Have an idea of what you're looking for. Are you looking for a good commuter car that's going to save you on gas mileage? So do a little bit of research online. If you're looking for a Honda, look at all the Hondas out there. And then there's some Toyotas. Toyotas match your Honda. You got a Honda Accord and a Toyota Corolla, pretty similar cars. Look at both of them. Know what vehicle works for you, and then you have an idea by doing that of what they're actually selling for. So when you go to that dealership, you know, okay, so this 2015 vehicle price is about $12,000. So you should be looking around that area and be like, it fits my budget. And so I'm going to kind of be in the arena of that vehicle and stay put. It doesn't mean you can't change when you get to that dealership of what you like, but do your research. You change, go take a break and go to your car, go get a coffee and do a little bit more research so you don't just get talked into purchasing a car that was just really pretty sitting there on the lot.
So what if you're not purchasing from a dealership? So you might be doing a private party. And what that means is you're buying from a private seller. So there are things that that a dealership kind of takes care of for you, like the titling. You're going to want to make sure that they have that title in hand, or if it's financed somewhere, meaning whatever money you pay for that has to pay off that loan that they currently have. So those are really good questions to ask when you're going through this private party process. The dealership's going to take care of that for you, right? So they're going to get trade-ins, they're going to pay off that vehicle. You're not going to be concerned with things like that. You're not going to be concerned with who was the previous registered owner. So if you're doing private party sales, something to think of too is who's on that title. They can't sell that vehicle to you if both people aren't there signing their release of interest. So those are like little things we don't think of. But those are important things to consider when you're thinking about how you're going to be buying your vehicle and what method you'll be using.
One of the newer things too about a private party sale in the state of Washington, they encourage the seller to remove the license plate at the sale. So you conduct your sale with that seller and you're excited, you give them the check and they've given you the keys, and then they'll say, oh, hold on a second. And then they start unscrewing the license plates and you're like, well, wait, I got to drive home. And that car's not in your name yet, and it could possibly take 4 to 6 weeks before it actually gets into your name. So it's one of those things to consider is that license plate. Don't be scared if you do it. You then would be responsible to go to the local DMV and purchase trip reports. So it is a little bit more costly coming out of pocket for you while that state transfers your title, but it is something required by the state of Washington.
So if you've already purchased a vehicle, and we talked about like trade-ins, right? So they're going to be paying off that loan. So if you're trading it in, that's something to consider too. So you have what you owe on your vehicle, let's say it's financed, versus how much the vehicle's worth. What I would recommend doing and what I advise our members to do is to look at the value of their vehicle before they go into the dealership and negotiate that. If you know what your vehicle is worth, you can kind of negotiate with the dealer how much they'll give you. So of course, they're not going to give you the private party pricing because their inventory is in and out, right? So they want this vehicle off their lot as soon as possible. The longer it sits there, the more money they lose. So you would just want to be able to say, this is what I want for my vehicle. And of course, maybe they're not going to give you as much as it would be to pay off your loan. And so some of that, it's called negative equity, is going to go into your financing. So that is something to consider too. So that just adds the amount that you'll be borrowing as that amount that wasn't paid off by their trade-in offer. So who has looked at their values on KBB before? Anybody done that? Anybody heard of JD Power? So those are the two main valuing sources. Get yourself familiar with that. There's nothing wrong with you also having that on your phone. We all carry around a little helper in our pockets. Let's use that as well to kind of see what those values are.
Absolutely. And it's also a good idea to do a search on the vehicle you're actually looking at purchasing. I was with my daughter at a local dealership and she was determined to have a white-on-white Jeep Wrangler. There's not too many of them, so we're going back and forth. But, you know, she looked, and being with me, we valued that out sitting in the parking lot, and we looked at the sale price and we started talking to the dealership about negotiating that price because they were selling it for more than what that vehicle is worth. And we were able to have a reduction of several $1,000s just because we did our research and had the value of that vehicle they were selling us at that time.
So you're headed to the dealership. We want to familiarize ourselves with who we're going to be buying the vehicle from. So most dealerships are like large franchise ones like Quorum, Tied at Will, things like that. But there are some smaller shops. So it's important for you to do your research, whether they're big or small. Read those customer reviews. Something to think about is a lot of people buy mostly used vehicles, let's be honest, in this economy. So a lot of people assume that I got this vehicle from a dealership, it's going to be in great running condition. But we just talked about that trade-in, right? So, and their inventory in and out. Of course, they're going to see if it runs, drives, and stops, right? But that doesn't necessarily mean they're going to be doing all the checks. Like, does it have oil in it? Like, they're going to do that, of course, I hope. Does it have enough tread on your wheels? But other mechanical issues with the used vehicle, sometimes it takes a pretty deep inspection or taking it to run codes, things like that. So don't assume that those things are already taken care of. A good place to look is the reviews online. What are other people saying? But something to consider too is sometimes those reviews are based off of false expectations. But that's why we're here today, to inform you so that you're better prepared to go to the dealership and know what to expect.
Mm-hmm. A lot of times you can find a special or a promo on their dealer website that's not available if you were to walk into the dealership. Another good reason to do a little bit of research on that dealership before you're going in, and print it out or take a good picture of it on your phone so you have it available. Because I guarantee you, when you're there, they're going to be like, oh, what promo is that? Because the same salesperson at the lot is not the same online salesperson. They're two different people. They don't necessarily work together, but they do work for the same company. So they may online have the option to offer the promo where the salesperson doesn't. So just because they're saying, well, what is that? Doesn't mean that they're not going to offer it to you. It's just they need to see it, and they need to see it so they can apply it to your order. So another reason is just super good idea to look at that dealership, and is there a rebate? Is there a promo? And how is that going to be applied to your loan?
So we also talked about the dealerships and the type of the vehicle condition that you're buying. So you can always ask for a Carfax. They should be able to apply or provide that for you. It should be within 30 days. We don't want something that's months old. Something might have happened to your vehicle in between that time. But something also to think of is on those Carfax or auto checks is, let's say you're buying this vehicle and Bob traded it into the dealership. Bob knows how to work on cars. Bob is not a licensed mechanic. Do you think that Bob's repairs are going to show on the Carfax?
No.
Maybe Bob thinks he's a better mechanic than he actually is, and now there's mechanical problems, so Bob's like, I'm going to trade this in. So something to think of, like if you're going to drop a good amount of money and you're going to be financing that, so there's a cost for this vehicle, is a pre-purchase inspection. It might cost you maybe a couple $100s, but if we're looking at a large purchase amount, it might be good for you to do that if you have concerns about the condition of the vehicle.
When you purchase a used vehicle, it is an as-is sale. That doesn't mean you can bring it back 3 days later and say, this doesn't run right, or the car is shaking. So you definitely want to pay attention to that. And like Vanessa said, people are trading in cars, and cars are flipping so fast. So you do want to pay attention to that. Take your time. Take your time when you're looking at the car. Look underneath it. Is it rusty? Is there holes in how much wear and tear is there on the vehicle? Is this something that you want? And then if you do pay to have that vehicle inspected, and it does come up that there is a mechanical issue, most likely that dealership will say, I'll get that repaired to you or for you. And they'll definitely do that. And that's how you can get that vehicle fixed prior to the purchase and not finding out afterwards.
So there is still a part shortage out there. So if you do find something that needs to be repaired, and you want to walk away with that vehicle, and the dealer says, you know what, I'm going to have to order the parts for that. Why don't you come back in a couple of weeks and we'll get this taken care of for you? But let's sign today. Get that in writing, making sure that this repair is contingent. This thing doesn't like me. Here we go. Yes.
I read up I dare you that also use stars and use TP. Things like rental vehicles. I'm not opportunized to spend on my and also the attack the value Emily is attack I could like it up they go like I try by mental much more aggressive than I do a boss. And also I also read online that all of the vehicles of like for like areas of the United States that I will see lot more, I say blood flow. Those cars also may end the deer wash the stays, so I should be concerned about that.
Those are great questions. Absolutely. That's one of the reasons why you would want to purchase or request a Carfax or an auto check from the dealership, because it's going to tell you that location, the origination of that car, how many people have owned it. It's going to give you the mileage. It's going to give you all your service records. Going back to your question in regards to being a rental car, you're correct. Rental cars, they are always typically a few years old. There's a lot of mileages on them, so they will affect your value by having a high mileage at that time of sale. So a lot of times you might see the same car, so let's say it's a 2015 Honda Civic. This one's selling for this, but this one's selling for a little less, but it has twice as many miles on there. Doesn't necessarily mean it's a bad car. It just means it's been driven a lot more and a lot faster by a lot of different people. Rental car agencies will sell their own rental cars, and they are selling the top 10% of their fleet. And then they're auctioning off the 90% of their fleet to dealerships. So you're very correct. A lot of the cars out there do come from a rental agency. It doesn't necessarily mean it's a bad thing. It just depends on what your driving style is like. If you're driving from here to Seattle every day, you might not want to purchase a car with high mileage. But if you're driving 12 miles a day just back and forth from Tacoma to Puyallup, you're not necessarily going to put a lot of miles on your car. So it might not necessarily benefit you, and you can actually make up a lot of value just on your own driving pattern.
There's also like ride shares that are being traded into.
Yes.
So like Uber Eats, DoorDash, people that are putting a lot of miles on their vehicles. So I cannot stress to you enough, please get that check on the vehicle, see what the history is. You can see with each ownership too, the reported odometer. So you can see, oh, did this just come from somebody? I won't tell you who it was, but owner number 3, you can safely assume they probably used it for a ride share.
So I can speak to not having the check done that Vanessa's referring to, and that my husband and I purchased a new vehicle, and within less than a month of owning it, the head gaskets blew. Head gasket, and it was a very large expense after purchasing a used vehicle that backfired on us. And then after that, multiple things began going wrong with it. So definitely having a check done on the vehicle is really worth your investment.
So we are going to talk a little bit more about the condition of the vehicle. Is it used or is it new? We want to make sure that you're protecting your purchase as well. So, and protecting yourself from probable expenses involving your vehicle. So most used vehicles, you've probably heard someone bought a vehicle and they're like, oh my gosh, all these mechanical problems, and I can't believe all this money I'm spending. There are things that can help you with that, like warranties. You want to get your pre-purchase inspection, because on your warranty, guess what? If that's something that's been reported as a mechanical issue, it's probably not going to be covered by your warranty, right? It's kind of like your insurance company. Pre-existing condition, like, oh, not covered. And that can be very, very costly for you. Also, with used vehicles, and someone saying, oh, it's a lemon. I got sold a lemon. Washington state lemon law does not apply to used vehicles. Mm-hmm. So there are very specific things that to meet that criteria. So also do your research with that. Those are typically brand new vehicles that have gone and had repairs within their manufacturer's warranty for a reasonable amount of time. And if it's not able to be remedied, then it could fall under the lemon law.
Absolutely. New cars will come with an automatic warranty. And it's a bumper-to-bumper warranty, and it's typically for a set amount of mileage and years, whichever comes first. Pay attention to that warranty and use it. Otherwise, you're just letting your value go away. So if you've got a bumper-to-bumper warranty and something doesn't seem right, your window's kind of shaking when it goes down, take it in and get that warranty value out of that vehicle. Be familiar with your warranties. We have service contracts, and warranties are two different things. A service contract is an aftermarket purchase. It is not a warranty from the manufacturer. Service contractors are different than warranties, like it says. So you want to make sure you do your homework on them. Some warranties require you to take them to the dealership that you purchased the car for, where service contracts allow you to take it wherever you want to, in state or out of state.
And for these warranties to actually benefit you, you have to do your regular maintenance on the vehicle too. So that means oil changes. So if you didn't do your oil changes and now your head gasket was, I'm not saying you did that. The person before you probably did. And now you have a big problem, right? Because you haven't maintained your vehicle. So that is also something to consider when you're buying your vehicle. Maintenance, how much is it? Because guess what? There's a big difference between my oil change and my 2019 Hyundai versus my husband's, I think it's 1500 Ram. I mean, also fuel difference too by quite a bit. So those are other expenses to think about with your vehicle purchase. And here it does say with your used vehicle, make sure those repairs are completed before walking away. But if you have it in writing, it is signed by the dealership, that is something for you to fall back on. Those parts come in. You said that these would be repaired. But if you don't feel comfortable, guess what? You don't have to sign that contract. You want to review it, make sure all the things that you wanted are on it, the things that you don't want are not on it. And then things to think about too are your sales tax. So how did a $15,000 vehicle turn into a $25,000? That can happen really fast. So make sure you review that entire contract. And then now that you have like a $20,000 or a $25,000 vehicle purchase versus a $15,000 value, you're looking at a loan to value difference. So versus the value of the vehicle. So you've done your research with KBB or JD Power, and then you have the total amount financed. And that's that bottom line on your contract there. Figure out what that ratio is, because guess what? If you total your vehicle, I hope that doesn't happen. Your insurance company is going to give you the value of the vehicle at the time of the incident. So that might not cover your full loan balance. So there's a thing called gap. So that is usually available by the dealership or your lender. So always ask about that. And there's going to be big price differences too. So if your lender says, I will give you gap for $500, but you go to the dealership and they're like, oh, ours is $1,500. Know what the gap coverage is. So although at the dealership you might be paying substantially more, but it may cover a higher loan to value. So ask your lender, what does it actually cover? What's my percentage that it covers? Because most dealerships gap covers 150%. Does anybody want to take a venture and see why, or answer why they might be offering a higher loan to value on their gap? Okay, it's probably because there's a negative equity. And that negative equity is when you've traded something in and now you have that additional amount that's going into your purchase to pay off your vehicle that maybe you've traded in that's financed. So that changes your loan to value position.
Dealerships have several products they can offer you for that vehicle. A lot of times paint protection, maintenance contracts, warranties, oil change contracts, gap, windshield, key fob replacements. There's all sorts of products that they can sell, and you can finance them into the car. Those things insurance companies do not take into effect in the event that there is a total loss. So that's another add-on to the discrepancy of a total loan to value when your vehicle is $10,000 and you financed $17,000. It could be that sales tax, it could be any additional product you purchase, and any rollover from a trade-in, negative trade-in.
That you share maybe a story that you've seen somebody who purchased Gap and how it's helped them when they totaled their vehicle? Just to give an example of how it really benefits somebody.
I can give an example both with warranties and with Gap. So Gap is awesome because I'll speak from my own experience. So I had teenage drivers in the house, and accidents happen, right, because they're learning. And I did not put my teenage driver into one of our newer vehicles because accidents happen. But we did have Gap. So my son totaled our vehicle, and which it really didn't seem like it would total it out. It was just to me, a minor accident. But insurance companies are more likely to total vehicles out now for a plethora of reasons. Maybe it's because of the repair costs have gone up, parts costs have gone up, so they might just choose to total out the vehicle. So we did have, because it was a higher interest rate, and my son also was financing because we're helping build credit, right? So he's on the loan with us at a little bit higher interest rate. So we had a balance left over. So thankfully, we purchased GAP with that. So we filed the claim because we had to get our insurance amount that came in, and it left I think it was like $1,200. And then we filed the GAP claim, and it did cover it, thank goodness. But you are still required to make that payment on that agreement you made with your financing. So your financing is not tied to your vehicle in the way where, oh, if I don't have my vehicle, then I don't have to pay. That's not true. You agreed to a finance agreement. So you're required to satisfy that loan balance regardless of what's going on with your vehicle.
I have a little GAP story from me, my own personal self I could share. We had a truck loan, and we decided to do a cash out refinance on it so I can pay off some bills and do a loan consolidation. So I took that value of our truck and I took as much cash out of it as possible, paid off all of our bills, and I had one monthly payment. A few months later, that truck was in a total loss accident, and insurance came in and did their portion of it up to 100%, and I had financed up to 150% at that time. So I now had over $20,000 of a loan left on I had a $20,000 loan balance still that I was responsible for. I had purchased GAP at the time, and GAP is actually short for Guaranteed Asset Protection. So I went ahead and I made a GAP claim, and within 30 days, that GAP company had paid my loan in full. And I really did a happy dance because I really felt like my bills got paid off by my truck. And I mean, although I was out of a truck and was back to a new purchase, it was just a really good experience. And having that GAP, it is a sense of relief to know that you are not responsible for that remaining balance of the loan on a total loss.
In most cases.
In most cases.
So that's why it's important to ask what loan to value does this GAP cover? So you might have a little bit of a deficiency balance left over. That's kind of rotten because now you don't have the vehicle. But it's better than having the full amount, right? So Janelle had the $20,000 left over, but her GAP covered 19. I'd much rather swallow 1,000 instead of 20.
Than that 20.
Right? So those are things to think about too.
Absolutely. Contract signing. So once you decide on that car, you're in the finance manager's office, and they're working up all that paperwork behind the computer, and you're just sitting there going, okay, I'm about to sign. What am I doing? Pay attention when they give you that loan paperwork. Nowadays, it's not actual paper unless you're at a smaller, like mom and pop dealership. Some of these larger franchises, it is all digital. So the last time I was at a dealership, the plate was right on the desk, and they were like, go ahead and sign here, sign here, sign here. And I said, I'd like to see what I'm signing, please. And so he's like, well, I could turn my laptop around, but you're just signing for financing this amount on your vehicle. And I asked him to actually print out the documents so I could actually have them present and see what I was actually signing for. It is super important. It is your responsibility. Once you sign that contract, it is a full contract, and it's a liable contract. So you are fully liable for that vehicle and that vehicle you purchased.
So it will be itemized. So you'll start with the price of your vehicle. Then it's going to go in any like rebates that we talked about. It's going to be trade-in values if you're trading something in. It might include
cash down.
It might have a negative number on there because you owe a little bit more than what they gave you for that trade-in. And then it's going to have its sales tax. So that sales tax is based on the selling price of the vehicle. That is before any of those discounts are considered. So Washington State does have sales tax for your vehicle purchase. Another thing to think of with sales tax is that you're also paying tax on that warranty, right? You're going to have those costs associated with that too. And all those things added together gets your bottom line. So that's why it's important to read over it entirely. Maybe you guys were talking about a warranty that you wanted. Maybe you're like, yeah, I want that windshield protection. But then you're looking at that bottom line going, wow, that's a lot. And then up in that top box there is the Fed box, and it's going to give you your total amount financed. It's going to give you the cost of your loan. So that's with over the life of the loan, the estimated interest that you're paying. It's going to give you your APR. It's also going to give you your payment. So maybe you're ready to go with a $300 payment. And now with all those great things that they're like, yeah, you should have these protections and all these other things, which aren't bad, but maybe it's not so great for your pocketbook. So that is why it's super important to ask your finance company, do you offer warranties? Do you offer gap? What is the pricing on that? Because maybe they might be able to beat the price of the dealership. And that can happen so quickly. So I do outbound calling for our members that purchase at a dealership. And a lot of feedback I get, especially with newer borrowers, is I got my stuff from you in the mail, and how is this my payment? And like, oh, I was just so tired. I was there all day long. I was just exhausted, and I was just excited to leave with my car, and now I have this big payment. So then we go down the itemization, and they're like, oh, I didn't even think about sales tax, or, ooh, that was a big warranty. So sometimes we end up doing refinances to make it a little bit longer term because I want to keep those products. And it is something to think about too, is that if you decide I don't want that warranty now and you want to cancel it, that goes to the principal balance of your loan. It doesn't go back in your pocket because it's part of your finance agreement. And that also doesn't change your payment on your loan. So without a refinance.
Absolutely. So know exactly what you're doing and signing before you sign. Once you sign, like I said, it's a legally binding contract and there's no takebacks. There are some dealerships that will offer like a 5-day trade-in. Like say you drive away and you're unhappy with the vehicle and you've got 5 days to trade it in. Pay attention to that small print because that trade-in may require you to purchase another vehicle off of their lot. So that is something to be careful about. So you're not just going to buy a car for 5 days and then take it on a road trip and then return it because there are small print requirements that would require you to purchase a new vehicle from that dealership.
Or mileage. That's the other thing. Your warranty too. It's X amount of time or this amount of mileage, whichever comes first. So even with that 5-day free look, 3-day free look, look at that too, you know, because what if you did take it on a road trip and now you come back and like, well, you're well over those miles. So sorry,
yeah,
this is the vehicle you have. They might work with you on that. They might say, well, you could trade it in and get this vehicle, but now you're looking at things like negative equity, things like that. So it actually costs you a lot more. So it is super important to kind of stick to your guns, know what you're looking at, because it can just snowball into something that is very unexpected.
Absolutely. Have fun. We want you to have fun. This process is for you. You're purchasing a vehicle. You're purchasing something that you're going to drive every day and pay every single month. So you want to have fun and you want to buy what you want to buy. And some of the things to think about when you are going to a dealership is what are the documents that I'm going to need? So I suggest that you have your pay stub ready or readily available to download on your phone, your driver's license. You are not allowed to test drive a car without providing your driver's license, and insurance. If you have insurance, bring your insurance card because they are required to have your insurance prior to you driving away with that vehicle. If you don't have insurance, they will more than likely ask you to purchase insurance at that dealership until you can go and obtain your own through your own local insurance company. So definitely have your documents ready so you can have a seamless purchase at that dealership.
Just a little side note on that insurance, when you do add your vehicle to your insurance policy, make sure that your lien holder is your finance company. And find out what your finance requires you to have for your coverages. So sometimes they want nothing less than $1,000 deductibles for your comprehensive and collision. Know what those things are because that can also change the rates that you're paying for insurance too.
Absolutely.
Yep. Lien holder is the actual legal owner. So because you're making payments on your vehicle, like let's say you finance a Sound Credit Union. Sound Credit Union owns that vehicle until it's paid in full. So they place a lien on your vehicle title. So that means that they own that vehicle and you're a registered owner. So once that loan is paid in full, then they'll release their interest and that title will be sent to you. Until then, you're not receiving a title, you're receiving registration.
Absolutely. Are there any questions for us right now?
What is the interest rate? Like, if thinking about interest rate at a dealership versus through a financial institution?
That's a great question. So a financial institution has rates financial institutions, credit unions, at banks, they have their designated rates and they are set. Typically, they're a lot lower than a lot of the dealership financing. Dealership financing has 100 different aspects of financing that they can go through, and that's so they can get everybody into a car. If you walk onto their lot, they want to make sure you're driving away with one of their vehicles. So they have the financing options available. Vanessa said in the beginning of our class today is to go with a pre-approval. So if you walk into your bank, your credit union, whatever FI you're using, get pre-approval. There's a lot of people there that will help you and support you through this buying process. They'll tell you what your rate is. If you're at that dealership and you're standing there with your pre-approval and they said, I've got a rate of 5.59 and you look down and you've got a better rate on paper, great, use your rate. But a lot of times, it could be quite opposite. They can say, I can get you financing with this financing institution over here. Make sure you share your pre-approval because it's valuable information. It's really like a check. It's telling them that you're covered, you've got a loan, and you know what your interest rate is.
So sometimes that pre-approval is for more than you're willing to finance. So you don't have to show all your cards. You can say, I am pre-approved and then I only want to spend $15,000, $20,000, $30,000, whatever that might be, because you might actually get a pre-approval for much more than you're willing to spend. And that's based off the loan calculations, your liability calculations, and it can be impacted by your vehicle too. So that's great things to ask your lender about how would this impact my rate. Sometimes if you get an older vehicle, it might increase your rate by a certain percentage because it's a higher risk loan. There's not as much value to that vehicle. Yes.
Talk about pre-approval and how that influences credit score. I want to be getting multiple pre-approvals.
Good question. So if you do that within a few days and it's only for auto loans, the credit bureaus typically look at that as one inquiry. So if you go out, like you do an inquiry for an auto loan and then you're like, well, let's see if I can get approved. Oh, that's a really great score. I want to see if I can get approved for a credit card. I've been thinking about that, or a personal loan now. So those multiple inquiries for different types of loans can impact your credit. So I know that everyone's worried about their scores, which is good. But things to consider are you're going to be adding a new trade line. So that's going to bring your score down because you haven't made any payments on it. That's a new debt. It's going to take some time to bump back up there. So good question. You don't want to just go out and apply all over the place. Sometimes at the dealership, you might ask for financing there. You might receive multiple notices from other lenders because they kind of just throw a wide net out there and see what you can get approved for. That's why they can say, well, if you go here, it's this rate. Maybe you want to go with this lender because they don't have a rate increase for this older vehicle type of things. So don't be alarmed by that. Expect that, but know that if you do this like maybe 30 days later because you're indecisive, that can impact your score now too. So that's why it's important to know what you want, do your research before you pull the trigger on going in and making that loan application. Make that inquiry count, and also ask your lender how long that pre-approval is good for too.
Absolutely.
If you did get pre-approved through your credit union or bank, that speed up the my process at all, or does it have like zero impact on how long you sit in the finance office? Because I fit at the dealership for 4 or 5 hours. I really don't ever stay away.
It absolutely is a benefit, and it does speed up your buying process. Because they're not rate shopping, they're not sending your application to a bunch of different FIs and banks and waiting for a response back, and then trying to find you that best rate and best term, best payment option. So with you, when you walk in with a pre-approval and you're saying, okay, I'm going to finance with my FI, here's what I'm approved for, here's my rate, they're inputting all of that in there and they're sending it right over there. You're not waiting for that FI FI to respond back to the dealership. And not only that, they don't have to respond to the dealership. They can write you up, or I mean to the FI, they can write up your contract right with your pre-approval letter and then send it to the FI later on behalf of you. So it definitely speeds up that process.
That's if they participate in like that network where the dealership can contact your finance company. So that's another thing to ask is, do you work with my financial institution? Or ask your financial institution, do you have dealerships you work with? A lot of the times on their website, they'll have tools for you to find dealerships. Here in Washington, with credit unions, you'll hear the term CUDL, that's credit union direct lending. That allows dealerships to send your loan directly to your credit union or other participating credit unions. So, yep. To answer that question.
Yep, and there's a lot on the dealer websites and a lot of FIs. There's calculators, so you can calculate what your own payment is. So if you're looking for a $10,000 vehicle or a $25,000 vehicle, throw that number in there. Throw it in there with a rate. And kind of have an idea of what that payment's going to look like for you. It's really beneficial and can really help speed up that process and your confidence in purchasing that vehicle.
Yes.
Finance big money. And then I was like, I'm sure I'm still working with managers to financial institutions, so they gotta be so each country with financial institutions. I'm assuming, I'm not sure. It's like and also as a result that is a board allocations, putting a board like finance issue or a board financing. Like understanding how they pay is really important.
Dealerships are always purchasing the vehicle for less than the actual value so that they can sell it to you for the value of that vehicle or more than that. Whatever that vehicle is worth to you, they can sell it to you. That's another.
Yeah. So a lot of their incentive is on ancillary products. So that means like warranties, things like that. They work with other companies who provide these warranties. And so there is incentive for that. That's why you're able to negotiate the pricing on that. So that's not necessarily a bad thing, but that is part of how they make most of their money, really, is that. There are sometimes agreements between financial institutions and dealerships, but that is case-by-case basis. It is by financial institution. There's a lot of different variables to that. In-house financing, I would assume that they're probably getting more of a kickback for that, right? Because it's their own financing. They're not sending it out somewhere else. So that would be the reason.
That's a great example of why looking at your financial institution for gap or different types of warranties that they might have is worth your investigating with, because gap at a dealership might be $1,500, like Vanessa said, but at your credit union or bank, it might be only $400, and that's a big difference. So be your own advocate and research.
Absolutely. Yes.
Could you go down the warranty and like sales tax and register?
That's a great question, and several people think that they can go purchase a vehicle in Oregon and come back here. As soon as you register, Washington requires you to register your vehicle in Washington. As soon as you register that vehicle, they will charge you sales tax at the time of transferring the title from Oregon to Washington. So no, you're not actually going to jump and save on that sales tax, but it's a great question.
Buy your shoes there, not your cars. Yes.
So what is like refinancing it? Would that be something to look at?
So refinancing is something you want to look at. So let's say you're a new borrower. So your rate is set a little bit higher because you don't have much lending experience. You've made your payments on time for a couple of years. Refinancing would benefit you because now you have credit history. You've made your payments on time. You've subscribed to a credit monitoring service, whether that's Credit Karma or your financial institution. So you see that score go higher and higher and higher. So that would be a good time for you to refinance because you can take that loan value and put it into a new loan to get a better rate. Or sometimes...
And lower payment.
Yeah, and lower payment. And sometimes people, depending on your life situation, if there's been a change in your life where you're like, oh man, this payment is really high, but I paid 3 years into this and it was a 5-year loan, they might be able to stretch it out again too, into something that's a little bit more comfortable for you. But refinancing is good to think of to save yourself on that interest as you become more of an experienced borrower. But you don't want to do it right away because remember, when you open that new trade line, your score is going to take a hit, right? Because you don't have any history with that.
Definitely.
Typically, it's about 2 years to get that good history, that good payment history.
Absolutely.
My payment's like almost $700 right now.
Uh-huh.
I can afford it right now because I live at home.
Right.
Later come behind, that changes.
Right. Absolutely. It's always beneficial to refinance your car so you can lower your payments and make it affordable for you. One thing to keep in mind, if you purchased GAP at that time, it only lives with the original finance contract. A warranty will live with the car. So whatever warranty you purchase or a lot of other products live with the car and will travel with you no matter who it's financed with. GAP is a protection to the financial institution, and so you would have to repurchase GAP at that time with the new, because they do treat it as a new refinance, but you are not paying any new sales tax on a refinance either. So it is very beneficial to refinance. A lot of people purchase a vehicle maybe with their parents on there, and then about a year or two into it, the parents are like, okay, it's time to move along and get your own trade line. I'm ready to come off your trade. And that's another reason why a lot of people will refinance. And at that time, we can lower your payments and get you into a newer loan for you that's best suits your new financial.
So are you paying more on interest when you do that? Like I think they said for my term right now, I get like $7,000 in interest.
That's over the life of the loan. So that's over the life of the loan if you make your payments exactly by the schedule. So if you make your payment on the 15th of every single month, that's what you'll be paying. If you make your payment every 2 weeks, like Vanessa had mentioned earlier, you're paying your interest on your unpaid balance. So if you put additional money down, if you have a lesser amount, you're paying less interest.
So thanks for coming back to Car Buying 102. We have our friends from Sound Credit Union here today, Jen, Janelle, and Vanessa, and they're going to walk you through more advanced car buying strategies. And pay attention to our April schedule. They have a bunch of new events coming out for April, spring. We have a retirement series, a 2-parter, and then I have a Love and Money series with a lawyer and a financial expert. So those will be coming up down the pipeline. So welcome again.
Thank you.
Thank you all for joining us again. How many people were here for the 101 class? Awesome. If you were not here for the 101 class, we're going to start with a high-level overview with the information that we went over so you're not missing out on anything. And then we're going to get into some more advanced topics with car buying. My name is Vanessa Kavanaugh. I work in our consumer lending department at Sound Credit Union. I've been with the company for 15 years. My passion is for serving our members and educating them. So thank you for giving me the opportunity to do that today here with you.
My name is Janelle Borseth. I've been with Sound Credit Union now for 25 years. I also have a passion in lending and financial wellness. So I love to be able to present and give you the knowledge that we have and that we talk about so frequently each and every day. So a recap from last week, we did Car Buying 101. We talked a little bit about researching on the vehicles, kind of know what you want, what you're looking for, and what your desire is. Once you have that kind of in the works, you want to look at your budget. What can you afford? What's your monthly income? What's the vehicle selling for? And how much can you afford each month? Collateral selection is again kind of with that research, you've kind of narrowed it down. Look at different dealerships. Don't focus on just the one dealership. There's different cities, different areas. South Tacoma Way, Puyallup in this area are very heavily loaded with car lots. So definitely look around. And if you want to go out to Auburn, Sumner, as far out as Lake City Way in Seattle, there's a lot of areas of car lots that you could look at. So you don't have to just focus on the one car lot when you're in that arena. And financing. We did touch a little bit about financing. We're going to get into that really heavy today, and then closing that deal. When you close a deal, it is a legal binding contract. So every single time you do sign that contract, it's legal and it's obligating. So you will be responsible for that term of the loan.
So speaking of financing options, one of these that you're going to be seeing quite a bit if you're not an experienced borrower is a first-time borrower program. So it's important for you to understand the lingo that's going to be presented to you while at the dealership making your purchase. A first-time borrower program is for new borrowers. So typically there are stipulations on this type of loan, like required cash down, because you're not going to be necessarily financing the full value of the vehicle. And there may be a little bit higher rates for that. There are going to be monthly income requirements. So in order to satisfy your loan, so in order for a finance institution to provide you with a loan, you have to have the ability to pay it back. So there may be things like length of employment, minimum monthly requirements. So those things will be part of those stipulations for the first-time borrower program. The loan to value, so when putting cash down, for Sound Credit Union, we require that 80% loan to value for a first-time borrower program, and there might be a limit on your loan amount as well. So it's that when you're doing your research to see what that value is, so you can kind of see like, whoa, what's the sale price of the vehicle versus what's the value if I need to put 80%. If I'm only financing 80%, how much cash do I have to put down? So you're going to be looking at your savings account, what you've saved up to make this purchase, and if that makes sense to you to move forward. There are other financing options that we'll be going over as well, but if you're looking to do this on your own, the first-time borrower program might be something that you're looking at. How many people here have an established credit score or have taken loans before? Awesome. So you want to make sure that you see what that score is, because that score is what determines your rate. Another factor might be experience too. So how long have you had trade lines open on your credit report? So this is why it's so important for you to be tracking your credit, to see what types of trades are active on your report, that no fraudulent things are going on, because that can drastically impact the options you have for financing.
A little bit more about first-time car buying is you can go into any dealership and more than likely they're going to find financing for you. Is it the best financing? Maybe, maybe not. So just definitely know what you're walking into, and establish an account with your local financial institution, a bank or a credit union. If you have an established account, you have a representative there that's willing to walk you through the process and give you a rate up front if you apply with them, or give you an average rate of what it would be if you were to apply with them. That way, when you go into the dealership and you are looking at that financing and you're buying your car for the first time, you absolutely know what rate you are walking away with. Because if you are walking into a dealership and you have a 0 credit score or a low credit score, you're going to be paying a very high interest rate up into the 30s, and that will take a significantly big impact to your actual monthly payment. So definitely pay attention to your rate that you'll be getting prior to actually going to that dealership and visit your financial institution. A conventional loan is your traditional loan. It's with somebody that has established credit and they've been at their employer for a significant amount of time, and there's term flexibility. You can probably go out to an 84-month term. That's a 7-year term on that loan, versus a first-time buyer, you'll be limited to a 48 to a 60-month term. So it's a little bit shorter payment. And then it's complete financing. When you have an established credit score and an employer that you're employed at for a significant amount of time, you have that complete financing. They're going to allow you to purchase that car and all your add-ons, and very possibly 0 down. So you can go into that loan without putting any money into that loan.
This conventional loan might be an option for you as well. So if you don't have an established credit score yet, you are a first-time borrower, but if you go jointly on it, so let's say a family member or somebody that you trust, make sure that's not just any co-borrower, because they also have to trust you. But if they have that established score, that score is going to drive your rate too. So that might open up an opportunity for you. So those are things to consider as well. Do you have a co-borrower that's willing to go onto the loan with you as well? The other option that may be presented to you is a lease. Does anybody know what a lease is? So a lease is an agreement that the dealership will offer you, possibly, where you're not actually the owner of the vehicle, you're technically borrowing it, you're kind of renting it. Lease options typically require a down payment as well. In that contract, you are going to be limited to whatever mileage that you select. Any additional mileage after your lease term is over would result in additional costs, including wear and tear. Those might be additional costs as well. This is a great way for you to drive a vehicle around for a set amount of time to see if you actually like it. At the end of the lease term, you will be offered the opportunity to buy the vehicle. So that sales tax will be calculated at the end of that. But if you do not want to have that vehicle, you can return the lease and they'll start that process to see what additional costs may apply in any lease termination fees as well. This may not be something that you're interested in because of the fact that you have to put cash down. You don't get that money back, and you may have that additional wear and tear, which will result in additional costs. This does report to your credit as well. Like any other loan, it will show that it is a lease.
Is the financing that's for a lease typically through the dealership?
Yes. Yes, some financial institutions offer something similar. Typically, that is called a balloon loan. So at the end of your lease, if you want to purchase, that final payment is due. So when you're doing a lease, you only are paying on the amount of time that you're using it. So there's a total purchase price of the vehicle, and then part of that amount is into the term of your lease, and that's what you're making your payment on. So, but financial institutions may offer a balloon. So instead of being able to return the vehicle, which may be part of a balloon payment, but that full amount would be due. And if you don't have that amount of money lying around, it would require conventional financing to satisfy that balloon payment. So, but if credit changes during that time, that might not be an option for you as well. So it's very important to work with your financial institution about what options are available to you before going ahead and making decisions on how you're going to proceed with getting your new vehicle. So anything you wanted to add?
Okay, you nailed it. When purchasing a vehicle at the dealership and with your financial institution, there's going to be options to purchase additional products that actually benefit your car. They're always going to be offered to you by the dealership, and they very much could be offered to you by your financial institution. It's important to ask if you are offered, let's say you're offered a gap contract or a warranty from the dealer, you definitely want to check with your financial institution to see if they have those products available to you and compare the options. They're very similar products, but they cost differently and have different benefits associated to them. So you want to see what works best for you in that moment. And you really want to just understand what it is you're buying and how much value it's going to bring to you and your vehicle that you're going to have. All of those prices are negotiable at the dealerships. So if they give you a warranty and they're saying it's about $3,700 and it just doesn't fit into that monthly budget, because that $3,700 warranty would be added on top of the vehicle purchase price that you're buying, in addition to that sales price and license and titling fees. So you want to kind of pay attention to what it is your budget is accounted for and what that monthly payment is. Because if you went in there thinking you're buying a car for $15,000 and you know what that payment would be for that $15,000 loan, and then you add the tax and license to it, the licensing fee, and then your additional products purchase, do extend that LTV, that loan to value, and will increase your monthly payment.
So yesterday I actually purchased a brand new vehicle. And I did purchase products with it because I know it's important to protect myself and the vehicle I'm spending a lot of money on. So I did purchase the dealer's warranty because it did cover everything. That's not something I did compare our financial institution's warranty as well. The cost difference was $400. But if I'm looking over the life of the loan, 84 months, that monthly cost is not that much to add that on. Additionally, I purchased a gap product. So that would be if I were to total my vehicle and my insurance company said, your vehicle is worth this much right now, but if my loan value is higher than that, I'm going to have a residual balance left over. And I'm still responsible for that because, again, at the beginning here at the dealership, I signed that binding contract. So now I have to pay what's left over. But GAP, what that is, guaranteed asset protection, can either greatly reduce that deficiency balance or satisfy it completely. So as your vehicle depreciates, that might be something that would impact if you were to have a total loss. We're going to get into that a little bit further, but again, this is something important for you to ask your financial institution. Do you offer these products? What is pricing on it? What are the cancellation terms? Because again, not everything is apples to apples. So dealer products are typically cancelable. Sometimes financial institutions, if they're getting you at a much better price, they may not be cancelable through the life of the loan. They may be greatly prorated, or maybe after a certain amount of time, they're not cancelable. So ask those questions, know what you're looking at. It can be very overwhelming, but take your time with that because this is something that you're investing in and something that you'll be paying for every month.
A little bit more information on the GAP, that guaranteed asset protection. Vanessa had a really good idea of pointing it out of exactly how it is going to cover your vehicle. So you have that car financed. The minute you drive away, you bought that car for $15,000, you finance tax and licensing on it, and maybe you put GAP onto it. The second you drive away, if that vehicle was to be in a total loss accident, the insurance company is not going to cover your full loan completely. It is only going to cover that 100% of that value. So right away, that same very day that hopefully that doesn't happen, but a total loss accident, you now owe a little bit more money. So if you did purchase that GAP on the loan, then the insurance company comes, writes your financial institution a check to cover that balance, and then you make a claim with the GAP company to cover the additional balance. And it could take a few months for that company to actually pay off that loan in full, or hopefully it's in full. But in the event that that does happen, you still are required to make your monthly payments, even if there is a total loss on that vehicle. It's super important to know because in the event that you do have a total loss and you don't make that final payment because you're assuming, well, why am I paying for a vehicle I don't have anymore? It's a total loss. Well, your financial institution still has that contract, and they're still reporting to your credit bureaus. And if you don't make that payment, that first non-payment made on a credit report is going to reduce your credit score significantly immediately, and it will affect your car buying experience going forward that next month. So yeah. Any questions about GAP before we move on to warranties? Perfect.
So warranties protect your vehicle. Your GAP protects your loan. So that's protecting your financing. Your warranty protects mechanical failure on your vehicle. There are tons of warranties out there that cover a lot of things, down to just powertrain. Typically, if you're buying a brand new vehicle, you are offered a manufacturer's warranty. So do your research on what that looks like. If your vehicle is still fairly new and you're only the second owner, you've checked your Carfax, making sure that you are aware of all the servicing that has gone on with your vehicle, any incidents of collision that was reported. You'll also see what number owner you are. So check those manufacturer's warranties, see according to the mileage and time, if you are covered under that. But then if you're not, or if you don't think that coverage is sufficient, then you do have the option to purchase a warranty. So you can do that at the dealership with their products. Typically, they have a lot of different options for you that are pretty custom. Financial institutions also offer them. So it's important for you to see what is actually covered, what is available to you. So please do your research on how much it costs for these vehicle repairs. You might see some domestic vehicles that are not as expensive to repair as some foreign vehicles. I know that we have a lot of BMWs, Audis, things. Those are really nice vehicles, but sometimes those costs are very high to repair if there's mechanical failure. So here we provided an estimated cost for repairs on mechanical breakdowns. So as you can see, these are pretty expensive amounts to cover mechanical failure. And if we look at this, if you purchase a warranty, let's say for $2,000, that's cheaper than your transmission replacement. And again, if it's included in your financing, you're only paying a portion of that each month to have that peace of mind and coverage. Is there anything you want to add?
A lot of warranties have a total loss replacement. So if you are in a total loss and your insurance company has paid off the vehicle, and you can now cancel that warranty and get the prorated refund back to you, and more than likely, or you can get that prorated refund back to you, but there are a lot of benefits to them. Some of the benefits would allow you to receive that full amount you paid for that benefit, that contract, back to you. So that's a benefit that you have in a lot of warranties, where you might have used it for $3,000-$4,000 and you're in a total loss, and now you're able to cancel it because you no longer need it, and that warranty is actually going to give you back that full amount that you paid for. So there's a lot of benefits in warranties, and also you want to think about that budgeting piece too. Are we budgeting for mechanical repairs? Because when you're driving down the road and the vehicle just shuts down now because they're all ran by computers, there's no warning, and you're just down on the side of the road going, what do I do next? So again, pay attention to that budgeting that you have, and put away a little bit of money if you're not purchasing a warranty to help you in a time of struggle. So definitely put away a little bit of money just so you have the ability to pay for that fix at the need.
So this can also help you if you have gap on there. So your insurance pays the value of your vehicle. You have money left over that you're still responsible for, but you remember that you purchased that warranty. That's why it's important for you to see what the cancellation is, what is available to you, so that you can have those funds back on the balance of that loan. That's very beneficial for you. That could even possibly satisfy your amount due to your financial institution. So in some ways, that mechanical protection can even help protect your loan.
And we're just giving you a high-level overview of the two most popular additional vehicle products you can purchase. There are several products you can purchase: theft deterrent products, paint sealant products, key fob replacements. So these are just two of the biggest ones, and that I believe have the most value to our vehicles that you have. But there are several products available to you, and do pay attention to what they're offering, and listen to what they have, because it might be very beneficial. If you lose your keys all the time, you might vehicle, you don't have to worry about that that lost key, and you can just get one made at that time.
So my son actually lost his key fob. And he locked his additional key in the car, which was not related to a fob. So you're issued typically two fobs, and we had to have a locksmith come out. So one thing was really beneficial is his mechanical coverage also included lockout service. So we were able to submit that claim and get that money back. And I'm super glad, because for that 1991 fob, it was still over $400. So it was really ridiculous. I thought, oh my gosh, really? Like this car, I don't even think is worth that anymore. But thank goodness we had that mechanical protection, and there were additional benefits like lockout service. So pay attention to those little extras that are available for the warranties as well.
A lot of warranties will have a trip interruption, where let's say you're actually driving over to Spokane for the weekend and your vehicle broke down over there. It's going to tow it to whatever dealership you want, and possibly pay for your overnight coverage and give you some food benefit at that time of
as you wait that lodging, so now you have to get a hotel room, right? Because you were like, oh, it's going to be over at my friend's house in Spokane, and I only made it just over the pass. So I'm pretty sure you don't want to pay for the Uber, right?
It's a peace of mind, and that's what I like to look at it as. It's a peace of mind. A little bit more about reviewing the contract: the vehicle price, taxes, fees, and the add-ons. Like I said, you're purchasing that car. I'm just going to use that $15,000 car, but we know cars cost anywhere from $1,000 up to hundreds of thousands of dollars, depending what you're getting.
Brand new truck, guys.
But yeah, pay attention to that. So if we're looking at a $15,000 car, like I said, we're going to automatically be paying sales tax to what city that you currently live in, not to where you're buying it. And any additional products would be adding on and license fees onto that. Federal Truth in Lending disclosure box does require on that contract to specifically show you exactly what you'll be paying for. And they'll also be showing you what you'll be paying for in total for that vehicle if paid exactly by schedule.
So something to consider about that box is going to tell you your term, your rate, your finance charge, and your purchase amount. So that finance charge that you're looking at is the interest paid over the life of the loan. Now, auto loans are not like mortgage loans, so the interest isn't already calculated out throughout the loan. You pay what's called simple interest. So if you were to make principal payments or additional payments, that finance charge is actually going to be less because you're paying down that principal balance over the loan. And so that's what your interest is calculated over. So if you plan on just making your monthly payment, your minimum monthly payment for the life of the loan, you can anticipate that finance charge is what we call the cost of the loan.
Absolutely.
Okay. So we're going to look at the cost of a $15,000 car purchase over a 72-month term.
So this is a National Sound Credit Union Consumer Lending Plan Advance Receipt. So this is similar to a contract that you would see at a financial institution and similar to one you would see at a dealership. It will have your name and your date and the date of the purchase and your account number. And that box that we were talking about is this darker big squared box right up here, and it starts with that annual percentage rate. So you see the 14.19%, that finance charge of $87.36.92. That's the finance charge that you're paying based on the amount financed calculated by that 14.19%. And if you pay your loan exactly how it's scheduled at the 72 months at $360.03, at the end of the 6-year term, you'll be paying $25,921.42 for that vehicle. So that's only if you pay exactly by schedule. So any additional payments that you make, any principal payments, or if you, let's say this scheduled payment is $360 a month. Let's say you schedule it at $400 a month. You're automatically paying less interest. You're not paying your interest first.
So you can see 14.19% is a higher rate. This is probably a first-time borrower. This rate is set at that because lenders will give you a little bit higher rate because the loan is a little bit more risky because you don't have any credit activity reporting to the bureaus. So knowing what you're looking at, the actual cost of things, as you can see, you've only purchased this vehicle for $17,000, but you're $8,700 of interest if you just do that minimum payment. So that is quite a bit of money. Did you have a question?
Yeah, I also wondered, does your rate score affect the annual percentage rate?
Yes.
Absolutely.
That is actually what drives it. And unless there's like things like first-time borrowers, some lenders will put you at a standard rate for that because there is no credit history established. But typically in conventional loans, that score is what drives your annual percentage rate. Yes. So typically that happens because you're an authorized signer on another account, whether that's business purpose or maybe a family member put you or able to use their credit card. That will rebuild a score to the credit bureaus, but a lender looks at that as just an authorized borrower, meaning you're not responsible for making that payment. So that is why even if you have a score established, but you still get that higher rates because you don't have any credit history.
Mm-hmm. Or comparable values. So comparable payments. So one of the things the lenders will look at is what have you paid before? So if you've had a previous auto loan at $3,000, $7,000, $12,000, and they're going to look at that payment history on that and then go, oh, okay. So then now they're looking at financing possibly a $30,000 vehicle. That's naturally your next progressional step. And so they look at that. But if you come in with a higher credit score due to an authorized signer, but you don't necessarily have any installment payment history to look at, your creditor may not give you a large dollar loan. So if you're walking in there with a high credit score, but you've never had an auto loan and you're looking at purchasing a new $77,000 vehicle, they probably more than likely will deny that or ask for or counter it back for a qualified co-borrower to go on that loan with you. because you've not shown the experience of actually making payments. Your credit score is driving that rate. And there are laws in place with that credit score. So everybody, no matter the applicant, is getting that rate tied to that. You're getting the rate tied to your credit score. So when Jen walks in and I know her, I'm not just giving her a better rate because I know her. I'm giving her the same rate that she would be getting anybody that was in the 740 to 780 credit score. So if you walked in with a 780 score, you're going to get the same rate as her with a 740. But if Vanessa walked in with a 640 credit score, she's going to have a little bit higher rate because she's not in that actual box. So no matter what it's tied to be, it's a protection for our members.
And when you're getting financing, you should be disclose what your credit score was, especially if you're having adverse action, meaning that maybe that was a counter offer or a result in a denial. So if you were counter offered for a qualified co-applicant and you did have somebody that was able to co-sign with you, that typically means that you're both equally responsible for that loan. So that's why you might get a little bit of pushback from a family member that says, you know, I already have a lot of loans open and that's going to impact my responsibility when I go to apply for a different loan. They're going to see that loan payment, even though you're making the payment, but I'm also responsible for that. And there's no way for a lender to know who's actually making that payment. But the good thing about that is if you do have an applicant who is willing to go on there with you, who is qualified, after you've had time on that, and it's typically 24 months that they want to see that payment history, you can look at refinancing and getting that all on your own. But remember, just because you're refinancing an existing loan doesn't mean that you'll still get that same rate. So that's subject to current rates and your score at the time of application. Does anybody else have any other questions? Thank you for asking those questions. That's great. We want to make sure that you're empowered and educated, so we appreciate your participation in this.
Down here on the bottom of this finance contract, it has some amount paid to others on your behalf. And these are things that maybe you purchased, additional products, and or our licensing fees. The state of Washington requires licensing fees to title your vehicle in Washington State. And so in this particular instance, they bought the vehicle for $15,000, and they did purchase GAP at a cost of $449, and they purchased the vehicle for $15,000, and that was made payable to South Tacoma Honda. And then the $3,550 is a Washington State title fee, and then the service contract they purchased is $17,000. So you will have a breakout of your amount financed on the same exact contract, and do pay attention to that. If you have any questions, you need to ask at that time. There's no waiting period. You don't go home and wait 3 days and say, what is this? I'm not sure what this is, or I don't want this. You do have an option to cancel a lot of products, but if you have questions, it's important to ask at the time because it's your contract. You're the one making that payment and for the life of the loan. So you need to make sure you're fully aware of what you're signing for and what you're getting, because you definitely don't want to purchase a product and then not actually know what it is, and then you'll lose that value. I know several people, we have several members that have purchased products at the dealership and didn't even realize that they had purchased it and never used any value to it. So it's really, really important to know exactly what you have and the use of it.
Something to think about too is this service contract that you've purchased for $1,700. So if you decide, you know what, I really can't afford that, you felt pressured and you signed that contract, so that's a legally binding contract, but now you're like, man, that $400 payment, I just really can't swing. That's not great for my budget because I also have to consider fuel for my vehicle. I have to consider the insurance cost each month for me to pay to have my vehicle properly insured. So lenders also have stipulations on your insurance. So it's typically $1,000 minimum or maximum deductible for comprehensive and collision. So that is more than the minimum requirement for Washington State, but because it's finance, that lender wants you to protect that asset and to ensure that it gets paid back. But let's say you wanted to cancel that $1,700 contract, that amount is going to go to the principal balance of your loan. So that's not going to impact your monthly payment because again, it doesn't just refinance your loan in that scenario, you can look at refinancing, but think again, like you've just put on a new trade onto your credit report. So your credit score is going to go down because there's no payment history on that trade. So it will come back up as long as you make those timely payments and don't have any other derogatory reporting. So it's so important for you to look at that contract, look at every single line item, look at your truth in lending box here. And if you don't understand, ask, because once you sign that, that is a legally binding contract. And not every dealership will give you like a 3-day, you know, $1,000 or 1,000 miles to drive it, or 3 days, whichever comes first, to see if you actually like that vehicle. Washington State does not have a cool off period. So that is not something that they're obligated to give you.
So let's talk new cars. So we have this is not the contracts, but everything that we just saw on the contract is also here, just in the little boxes. We kind of wanted to give you an idea of what it costs to purchase different amounts of cars. So if you had a loan amount for $28,000, an interest rate of 9.74, and you take that out for 72 months, you're looking at about a $515 payment. Typically, when you purchase a car, you have about 60 days to make your payment, and it is your responsibility to make that payment. You may not get coupons in the mail. You may not get a call saying your payment's due. It is your responsibility as a consumer to call or to make that payment on that that you signed for with your contract. It does show your first payment date on here. In this case, it's June 14th, and it does have a final payment. That final payment is if you paid exactly by schedule. So if you made a $515.23 every single month on the 14th, that would be your last final payment. Final payment date, it shows that you've got a 72-month term. So if you'll finance this in 2024, you'll be paying a 6-year term, and it would be satisfied in 2030. On the bottom box, it has your total interest for that loan of $9,095. And at the end of it, paid exactly by schedule, you'd be paying $37,000 for the car. I don't really like to look at it as that's what I paid for the car. So I don't want to scare you by saying that, because I want to look at it as I paid $28,000. I got a good deal. I negotiated, and I got a good deal for that car. So I don't really like to focus on it, but we talk about interest because it's there, and nobody's giving you a loan for 0 interest. You're just not going to get that anywhere. Yes.
Is the finance charge amount in the loan amount or in the total interest? No, is it in the loan amount?
The total amount.
The total amount.
Yes.
The finance charge is the total interest, correct?
Yes.
Yeah. So it's not in the loan amount of the $28,000. It's added on to that.
Okay, so because the finance charge is the amount that you're charging finance the car, right?
Correct.
But then and that's different from the interest rate, or it's within the interest?
The interest rate.
That's a great question. Yeah. Finance charge and interest. Finance charge is your interest, is what you're paying, and finance and interest are basically the same thing. They're one and the same. Yes, that's a great question.
Trying to differentiate the origination says each spirit is the financing charges.
I don't know. Charges.
Did you hear that?
I'm sorry?
Is there a loan origination fee associated with the vehicle purchase?
No, there would be no. Most financial institutions do not have origination fees. There could be some smaller dealerships that have a loan origination fee, but that would be disclosed by that dealership. I don't typically see a loan origination fee.
So I guess to answer the question, finance charge is the interest.
Yes.
Yeah, one and the same. Yep.
So who here is surprised by the loan amount versus the total number of payments? It's a pretty big difference, isn't it? So that is something definitely to consider if you plan on just making your minimum monthly payment. Again, like Janelle said, that's not necessarily written in stone. If you make a larger payment, let's say if you pay it off early, you're obviously not paying that much because you're not doing that full term. So it is kind of shocking to see that, but that's something for you to look at when you're looking at your final contract before actually signing. What is it I'm actually getting into?
And in this case, in this situation, it looks like the interest rates are a little bit higher here. I think average interest rates right now are anywhere between 6 and 12%. So we've kind of got right in the middle. So yeah, if you've got a great credit score or a great qualified co-borrower, you could very well have a lower interest rate. These are just some sample rates. We try to go higher when we're presenting, because we don't want to show you the lower numbers, because when you see the lower numbers and then you get shocked by a higher number, you're like, but I didn't think it was going to be that. So it's always beneficial, and it's that woohoo moment when you're actually paying less or have a lower interest rate than a higher interest rate. You know, we don't want to go from 5%. I'm thinking I'm going to get about a 5.5% interest rate, and then I go to my financial institution or the dealership, and then I'm walking away with 11% interest. So I'd rather show you like a little bit of higher interest rates and kind of show you more of the average of what the vehicles cost.
Sometimes that higher interest rate also has something to do with the year of your vehicle. So older vehicles typically will have a little bit higher interest rate, again, because that value is not sustained over the life of the loan, again, making it a little bit more risky. So the insurance company is going to go, well, for my son's case, that 1991, they're like, we'll pay you $1,000 for that. So that's definitely not what he financed. So in that case, if he's going to finance that out the door in 1991, he's going to pay a higher interest rate than he would something a little bit newer. Yes. Yes.
I was wondering, does the interest rate could be like, that's kind of different between like different types of cars, like sports cars, street cars?
No.
No, that's a great question. No, the rates are not tied to the car at all. They are tied to your credit score in the financial institution or the creditor that's actually lending you the money. Yes.
So knowing that financial institutions and dealerships both offer financing, is it typical that a financial institution might offer me a lower interest rate than a dealership?
So yes, that is typically what you'll see. Dealerships work with a little bit higher interest rate lenders. So since they do so many loans and they have less guidelines, they want to fund more loans. Their interest rates are higher. Just because the volume of loans that they have, and then the risk that they are taking with giving these other higher risk loans. So doing a pre-approval is very important at the dealership. If they participate in different, for instance, here in Washington, we have what's called credit union direct lending, so CUDL. So the dealer can send your deal out to multiple lenders, which in this case, CUDL's credit unions, to see what rates are available for you on your profile. So what they do is they build the application, they have your information on there, what your score is, what your income is, what you're purchasing, and the lenders will spit it back with, I would approve this loan. We'd accept it based on this information, this score. And that is a good way for you to shop for rates too. But if you are not interested in doing multiple inquiries, you can go to your financial institution. They will have their rates posted on their website. They're required to disclose that. But those rates typically are range rates. So that means from like 4.99% to 18%. So they're looking at like a 20 score versus 640. So they would not be able to quote you that rate unless they knew what your score was. And in that pre-approval, you would know what rate you're looking at. Ask them, if I buy an older vehicle, would this rate change? And what would that be? And do you have guidelines like what's my loan to value? So that might also impact your rate. So we do offer a little bit of a loan to value discount. So that means if you put cash down and you're only financing 80% of your vehicle or less, you would receive a little bit of a discount. With working with your lender direct or your financial institution directly, they might have things like an auto pay discount, like a little bit of a % off if you set up automatic payments from your account with them. That way the lender is assured that you'd make your payment unless you don't have funds in your account. But it's just that added layer where they're more enticed to give you a little bit of a discount. Yes.
I was wondering, is it a good idea to look at other financial institutions for like the interest rates with borrowing?
So yes, you want to compare them, but that doesn't mean you want to drop an application at every lender. So what you want to do is look at what their rates are. At least you would know the range. You know, does this one have a lower range or does this one have a higher range? So you might see like Chase or Wells Fargo or even Capital One or Santander is another one versus like Sound Credit Union, Tapco, BECU. You can see what their ranges are on their website to decide would I want to apply for this loan? Another thing to think of, especially with credit unions, do you qualify for membership? So even though you might get a better rate, but you don't qualify under their guidelines for who can be a member here. So sometimes you have to work for a certain company to be part of that credit union, or if you have to live in a certain area to qualify for membership there.
One of the things I said when I started is I truly have a passion for financial wellness. And when I work with members and I work with anybody that walks into a credit union, or I'm talking with anybody in general like you today, I'm going to encourage you to have an account at your local credit union that's local to you, and establish your membership. Your membership means so much to you and to that credit union. Credit unions are owned by the members, and therefore we typically will have a lower rate than the local banks, and will definitely have lower rates than the car dealerships as well. I say establish your membership because it means so much. So if you have a membership and you've been a member with your credit union for 6 years and you don't necessarily have a lot of trade lines on your credit reporting, but now it's time to go buy this new car because maybe you're driving the car your parents got for you, or you got, you paid for $3,000 and you're now ready to finance your first car, and you go to your credit union and they're looking, and I'm looking at this as an underwriter. I'm like, this has been a member he's been a member for 6 years, and he's got direct deposit here. He comes in and out of here. He has value in with us. And so I want to show you what the value of your membership is. And so I do want to look at that as an underwriting guideline and say, this is a member and I want our member to be able to finance a loan with the credit union. So there's definitely value in a membership with a credit union and or a bank, but I'm particular to a credit union because it is member owned. And we're definitely looking for what the best interest is for our consumers. Well, if it isn't as high, then you're just going to possibly pay a little bit more money, or you might have to put a little money down or have a qualified co-borrower. But I have been in this industry for 25 years now, and I can't tell you the amount of times I've sat down with somebody that's walked into a branch and has said, hey, I don't necessarily have a high credit score, but I am in need of a car because I've got this job and I don't want to lose this job, but I need to get from A to B. And so I'm going to sit down with you and I'm going to print your credit report and I'm going to say, okay, what is it that you need to do to improve your credit score? And then I'm going to offer you solutions to get there. So you might not be able to buy a car that day, but you might be able to buy a car eventually if we can get your score increased so you can buy that car on your own with individual credit.
You're telling me that some credit unions will help you try to improve your credit score?
Absolutely. I have done that. I don't personally work in a branch right now, but I did spend my first 15 years in a branch. And I can still tell you that I have those members that I sat down at a round table with, printed their score and showed them what they need to do and how to do it. I've sat there, we've called the creditors. Let's say you had a medical collection and it's just sitting there stale on your credit report, but you're like, I'm never going to be able to afford this $2,000. I'm not paying it. It's old. It's been there forever. I'm going to suggest we give them a call and ask if there's any kind of solution to get out of paying that, if they're willing to take a lesser payment and take a settlement on that. If you were to call, if you have a collection on your credit report and you were to call that collection company, and I'm talking any collection, and you were to ask them if they would take a settlement, they will offer you a settlement if you were to pay that day. And typically it's a very large decrease in what that balance is. There's also shared secured loans to increase your credit score as well. So that's another solution I would offer you as an option to build your credit and to establish credit.
We also offer a lot of resources online, so check out your credit union, Sound Credit Union. You don't have to be a member to look at these workshops that we have available online, information tools that will give you a lot of great information about improving credit, establishing credit, about security things. There's a lot of fraud out there that can impact your score too. So, you know, knowledge is power. So we highly encourage you to work with a local credit union to look at what's out there and educate yourself.
Yep.
I brought up the slide here. Sorry, Janelle.
Oh, no, you're good.
To just kind of give you an idea, we just looked at like lower interest rates. But let's say you bought a vehicle that was a little bit older. We're talking about how that rate might increase. So although it's not a brand new vehicle, it's new to you, but it could be a little bit more costly. So we looked at a 48-month term and a 60-month term, a little bit shorter than we're looking at in the first slide here. As you can see, these amounts are can be kind of hefty here. So that is an example of the additional cost for buying a used vehicle.
We also have a lot of financial institutions will offer you a credit score if you're a member. So like with Sound Credit Union, I am a member of Sound Credit Union, and in my app, I can actually go right on my phone and see what my credit score is today. It will also provide a lot of financial wellness on what I should do and what's impacting my score and what's good for that score. And it will give you levels of what you can do to increase that score and therefore, and also give you a lot of information on if you have negative credit reporting. It will give you information on how to get that settled and work with them and to do that. So there's tools available for you as a consumer. You just have to be present to have them, right? You just have to be a member. You have to have those additional products to get those. And just ask the questions. If you don't ask, we don't know. So
as you're closing up that deal at the dealership, if you finance there with them, just get copies of everything. Read over your contract, your retail installment contract. You're gonna look at line by line item. That's gonna give you your purchase price of the vehicle, the sales tax you're paying on it, your warranty, your gap, any additional coverages. It might show a trade-in value, maybe a negative number if you still owe on it. But then at the bottom there, it's gonna give you your total amount financed. And at the top there, it's gonna give you that Fed box, which gives you your term, your rate, your amount financed, and the total cost of the loan. If you're with your credit union or financial institution, they will provide you loan documents. But if you purchase dealer products like a warranty or gap, make sure that you get those copies from the dealership too, because that will give you information about cancellation. Yes.
In regards to the contract, do you know they will, if the dealer or financial institution will give you the option to review the contract like overnight, or give you like a day or so to review it prior to sign?
yeah, they're probably not going to hand you the contract, but what they'll do is they'll give you a purchase slip or a purchase slip. It's not signed or anything, and it's not an actual contract, a legal binding contract. But all of that information on that contract, they can actually give you that slip, and you can take it home. There's no guarantee by doing that that vehicle would be there for you in the very next day.
Yeah, I actually got that as well too. So they gave me like how much I was purchasing the vehicle. I told them what my pre-approval rate was. So they were able to put all those numbers in there, and he gave me a couple scenarios. If you purchase our contract, this is how much it's going to be. If you don't purchase the contract, this is what it's going to be, so that I could look that over and decide. But without signing anything like a buyer's order or the actual retail installment contract, that's not a guarantee that the vehicle is going to be there the next day. So that actually made me kind of nervous, because I went there on, I think it was Saturday, and I was like, oh man, I didn't sign anything yet. And we came back on Monday, and it was still there. But I had already made all the decisions, but I knew as soon as I signed that, I'm in it now. So if I want to make any changes, like canceling products, and that is something I'm kind of thinking of now, but I know I wanted to secure this product so I couldn't purchase it later afterwards because it was a dealer product. So with your financial institution, let's say you decide, I don't want to buy this warranty now, you may be able to purchase it in cash with your financial institution later, or doing something like a small personal loan. But at the dealership, they're like, nope, it's right now or not at all. So those are really important things to think of too. So if I end up canceling that, it's going to go to the principal value of my loan. It's not going to change my payment, but I want to make sure I secured that product because it seems like it's really great. And I read it over mostly. I'm not going to lie to you. It's like 8 pages. So I'm reading it over now, and I did read that I do have 30 days as long as there's not a claim that I'll get that full refund back. So I made sure to read that part. So always look at your administrator, the cancellation, what that entails, and if it's going to be prorated, if it's not cancelable, things like that, because it is your money, right? You're willing to spend this money on it. You want to do what's best for your dollar. That's sound financial advice. I've been in a spot where before I did not have a great credit score. I made some mistakes. So now that I've got that good credit score, you better believe I'm reading everything. I want to make sure that I'm making good financial decisions because it's hard, you know, and you're paying like 14% on a $20,000 loan. That's a lot of money, even though the monthly payment doesn't look that bad, but I'm working hard every day, right? So every day that I go to work and I get that paycheck, I think about what my time spent is actually costing me. So
We're kind of running up on time for today, so I want to make sure we can answer any questions before we let you go today. Yes. I think anything above 700 is a great credit score. Your highest credit score you could have is 850. I have only seen an 850 score one time in my 25-year career.
So something to consider about that is there's different bureaus. So if we come back and talk about credit, Sound Credit Union, please come back and see us. We love talking about that stuff. But there's 3 different bureaus, so they're going to report different scores. And even within that same bureau, there's different score models. So what you see Experian may not be what's TransUnion. So that's another important thing to ask. If you're monitoring your credit and you're putting in an application, ask that lender, what credit bureau do you look at when you're pulling my credit? Or maybe it's a tri-pull. So that's something to consider too. Yes.
You speak on something like this again, maybe talk more about the red. There you go, debit tax.